back to the crypto, which is, let's say you move to a regulatory regime like Europe or wherever else. The most liquid, vibrant market for the use of these assets remains the U.S. Would you still be beholden to some extent to the U.S. law? I mean, you cannot exit. Nobody wants to exit the market in terms of the opportunity here.
That's a tough one. I think there would have to be a couple theoreticals applied to sort of like give any strong answer to that question. I think the first one, what would happen if the U.S. did in fact determine that all of these were securities? Bitcoin was a security, Ethereum was a security. I think we would continue to see institutional use.
Mm-hmm.
I actually these giant institutions that do billions of dollars of business and see trillions of dollars of volume move. Like the cost difference between complying with one regulation over another is relatively negligible. It's not cheap, but it's relatively negligible compared to the cost difference of a retail trader that has no compliance ability built in when faced with a decision that would ban or that would turn all of this into a security. So I think that we would institutions, I think, would actually continue to do it. If you look at what CME Group is doing with their futures trading, it's pretty obvious when you look at the users there that those institutions probably would keep doing business. They're already complying, right? But yes, I think a lot of the retail business would be driven elsewhere. And I feel a little bit like a broken record, though it's not necessarily me that says this, but a lot of people you hear say over and over again, this is great for the developing world. This is great for the developing world. This is great for the developing world. And it's not actually proved to be a huge point of adoption. To your point, the U.S. market is still the most liquid.
Ditto for ESG, by the way.
Yeah.
There's a history.
But I just had a phone call with a taxi driver in El Salvador that just bought his 9th car for his fleet of taxis, doing drives that are only paid for in Bitcoin.
El Salvador famously going all in on Bitcoin.
Yes. And what's interesting about that, you hear all this talk about the fluctuation of the price and how it makes it bad to spend. The fluctuation of the price, how it makes it bad to spend. The same can be said for any currency, especially if you're trading it market to market. Those price fluctuations are incredibly catastrophic or incredibly helpful if you're trading dollars against pesos. Or,
may the wind
against
be
renminbi.
At your back.
Exactly. But, as we know in the States, we never think about the price of the dollar relative to another currency when we're buying bread. And same can be said for countries, even in, with hyperinflated currencies, like they take the cash out, they pay it, they go home and, they go on with their lives. What's interesting that's happening in El Salvador, they're not thinking of their adoption of Bitcoin as an investment opportunity. They don't care how much it's worth relative to the dollar. They don't care how much it's worth relative to another cryptocurrency or another fiat currency. They are only doing business in Bitcoin. And they're not adjusting their prices on a day-to-day, minute-to-minute basis to reflect those changes relative to another asset. And it was really eye-opening for me to talk to this taxi driver who had just bought his 9th car, had 8 employees, was only accepting Bitcoin, who didn't really care about that.
That's interesting.
That fluctuation. So it's a long way of saying I'm actually starting to open my eyes up a little bit to some of these claims that the developing world might actually still be a right place for adoption if the regulatory environments in the so-called developed world decides to take a position that stops that.
Interesting. Well, all the more reason to keep an eye on Gary Gensler.
Oh, definitely.
Thanks for joining us.
Thanks for having me.